Every strategy you've traded was built by looking at the past. You looked at the chart, found a pattern, maybe backtested that pattern, and you thought, wow, this works. But here is the thing nobody in the industry wants to talk about. As soon as you go live with that tested strategy, the edge has already started dying as the market has already started changing. This is what's called alpha decay and is the single biggest reason why most traders blow their accounts, fail challenges, and go strategy to strategy wondering what the hell went wrong. Today, I'm going to show you what alpha decay is, how it kills automated and manual strategies, and how I've built a system that solves it. Let me explain what happens when you develop a strategy. You pull up a chart, say the 1 hour time frame on the Euro USD. You look at the last year, maybe 2 years of data. You notice that whenever the RSI dips below 30 and the market is above the 200 moving average, the market tends to bounce. You test it, and the back test works out phenomenally. What you've just done is called curve fitting. Not intentionally, you haven't set out to deceive yourself, but you've just used the same data sample to not only discover an idea, but also validate that idea. This is like writing questions to an exam and then taking that exam when you know all the answers to the questions. And this is retail-wide as well. Every course, every signal group, every forever model put out by your favorite guru, if it was developed on historic data and not tested on unseen data, that is curve fitting. The few traders that are forward testing their strategies on demo accounts are doing the correct thing in principle, but they're doing it at a snail's pace. And it may take them 3 months just to find out that that strategy doesn't even work. Now here's where it gets worse. Even if that strategy does have an edge, and you've completely validated that edge is still going to decay over time. Think about it. Markets change all the time. Volatility shifts throughout the year, central bank policies change, liquidity conditions evolve. The market that you tested your strategy on literally doesn't exist anymore. Institutional desks already know this. They'll never trade a single strategy for 5 years. They'll rotate a basket of strategies, retiring old ones that have an eroded edge with newer, better ones. Retail traders will find a single strategy, they'll marry it, they'll wonder why it stopped working after a couple of months. Is it their discipline? Is it just a rocky month? When in reality, that edge has already started declining and you should have already had a replacement strategy set up and ready to go. Algory is a genetic algorithmic engine utilizing natural selection to create trading strategies using institutional grade indicators and concepts. When you launch a campaign with Algory, it will generate thousands of potential strategies. Random entry rules, exit rules, random filters, signals. Most of these strategies will be absolutely garbage. This initial phase is called the proving grounds, and it's where every single candidate gets backtested. The ones that lose money, the ones that take too few trades, and the ones that have excessive drawdown, they get completely eliminated. Only the survivors move forward. Then the evolution begins. Algory runs 2 competing tribes of strategies in parallel. Tribe 1 optimizes for consistency. It looks at high win rate, steady returns, and low drawdown. Tribe 2 optimizes for growth. It looks at raw profits and profit factor. These 2 tribes evolve independently across multiple generations. Each generation, the top performers survive. They breed, they cross DNA, their parameters get mixed. Their children get mutated, random changes in the environment are introduced to explore new territory, and if a population stagnates, the entire population gets wiped and reseeded with fresh candidates. Once both tribes have evolved, we merge them together into what we call a final war, in which they share genes and evolve again under a new balanced scoring system. But here's the critical part. Everything up until this point has just been training, and the bots have still only been tested on the data that they were built upon. This is where Algory comes in and does what the majority of retail tools don't do properly, which is out of sample validation. Before any strategy gets saved and before you even see it, the strategy has to go through one final examination on unseen data. Data that was held back from the strategy through the entire training process. It never had access to it. It was completely blind. If the strategy cannot turn a profit on this unseen data, it gets destroyed. No matter how good it did in the training or how many generations it passed and survived, if it can't perform on unseen data, it's curve fitted and therefore needs to be deleted. Only the strategies that pass this blind test are saved, and when they're saved, Algory then monitors how well they did on that unseen data compared to their training data. We call this persistence, and we have a calculation that monitors the ratio of out of sample performance to in sample performance, which essentially just measures the strategy's edge. A strategy with 80% persistence means that 80% of its backtested edge showed up on unseen data. If a strategy has 30% persistence, then it means that it was mostly curve fitted and only a fraction of its edge was real. This is what Algory does to separate real edge from noise. So here's why this seriously matters for alpha decay. Most traders are looking for that one single strategy that lasts forever. And we've already established that markets change, and therefore that is an impossibility. Algory isn't just a strategy, it's a factory that produces many strategies, all validated with an edge. You choose the best ones, and as markets change over time and those strategies do start to lose their edge, you already have replacements that have been trained on the latest data ready to go. All Algory strategies are completely copy trading free as they are unique per trader. They also have built-in prop firm guardrails such as daily drawdown limits, frequency limits, news trading filter, and forced Friday close. I built Algory because I was tired of the same cycle repeating over and over again, finding a strategy, trading it, watching the strategy's edge disappear, wondering what I did wrong, and then starting from scratch again. I wanted a machine that could do in hours what a manual trader could do in months, and do it without the bias, the emotions, and with statistical validation. If you're a trader and have already been through that cycle, you know the exact problem and where I'm coming from. There is a free plan to see the engine run for yourself, and if you are serious, the full version gives you smart mode, higher speeds, portfolio management, and MT5 export. The link is below. I'll see you inside.